The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be going over some simple 3-session reversal opportunities and just re-emphasizing some simple concepts about 90-10 setups. Today, Monday, we're into the second week of the year. So week 1, week 2, new month, new year, and a new week. And I cannot reinforce the importance of understanding setups, 90-10 setups. Interesting comment today from a trader was nobody has a 90% hit rate. And so my response to that was, that is part of the issue, is that people focus on hit rate, win rate, instead of 90-10 setups. And if you learn to train your brain what trade setups are, so I really struggle now with people who want to trade movement in the market. They want to trade things that are moving. We talked about a well-engineered template the other day. And traders, some excellent questions. And so today's short video will be a meld of psychology as well as technical. And the psychology of impulsive trading, random trading, over leveraging, going into tilt, trading the market when it's moving, and all of these things are things that you will do battle with within yourself. When you understand the setups that it's easy to make money on, and you rewire your brain so that is actually the only thing that you trade, that is trading when you have a 90-10 setup, not being a wizard of technical analysis, marking off levels and trading back and forth and catching moves and filling gaps and liquidity hunts and all these things. It's like, great, that's perfect. But let me ask you a question, and I want you to really think about this. How simple and easily can you reproduce that day in and day out and scale it up in size? All I'm hunting for are scalable parabolic setups. So there are going to be days when I get a 3-session setup for a stop hunt that's 25 to 50 pips. And there's going to be other days where we get a 3-session squeeze at the low of the day, the low of the week, the low of the year, the low of the month, whatever, for a parabolic move, maybe 50 pips, or a trend trade for 150, or a parabolic reversal for 150. There were several explosive trades today. Now, this comes back to understanding last week. I will repeat this again in this video. On a non-farm payrolls week, don't be surprised if we see a 5-day template, meaning that we can see a Monday, Tuesday, Wednesday that's doesn't give a textbook setup for a day 3 reversal or parabolic. Now, last week was a shortened week with the New Year's Day. But it's the same rules still apply. The first trading day of the month, the year, the week, the day is the opening range. Now, several traders asked me why I didn't count Tuesday as day 1. It would have been irrelevant on the indexes if I counted it as day 1. You still had 3 days of breakout traders heading into non-farm payrolls. So the question you need to ask yourself is, why are you fixating on a day count when you should be fixating on the template and then the setup on the day? Do you have a setup? Don't force or impose your will or your desire to catch a move or get a trade onto a market. Wait for the market to come to you with a well-engineered, perfect, best trade template. We've had like literally textbook templates for explosive moves, dump and pump templates, parabolic templates. And really think about this and study your daily charts. A parabolic template is scalable in size. I know there's so much BS being thrown onto traders out there. They're just trading movement with all kinds of garbage on their charts. And literally, it's simple as just doing nothing. Do nothing until you see a perfectly well-engineered template that coincides with a larger time frame model for an executable parabolic opportunity. So, point of today is we're going to talk about some reversals, some very simple reversal setups today. We're not even going to go and look at which candidates were the best executed opportunities on today. We're just going to look at ones that were simply obvious at the New York Open for easy free cash. Now we're looking at the Canadian dollar. It's a 15-minute chart. You can see the instrument up top and the time frame in the left-hand corner. And what I'm going to be talking about today is high of year and low of year opportunities. We've just started a brand new month, January, brand new year, brand new week, second week, week 2. So the same thing applies on a longer time frame for week 1, week 2, week 3, same as opening range, initial balance. And as the new week starts, we have a 3-session setup at the high of the year, high of the month, high of the week, high of the day at the New York Open. My whole mantra is keep it simple, stupid. And when people say to me it's too complicated, the day count, all of these things, and I've repeated this, I've made it so simple. Literally, Monday's day 1. I don't care how many day counts people meld together and everything else, but regardless of that, you still have to have a well-engineered template on the day. And the simplest thing, right off the bat, today we're going to be talking about high of year, month, week, and day opportunities in the timing window, New York Open. And so at the New York Open, this is a 5-minute chart. We had 15 minutes at the open into the high and an engulfment right at the high of the year, month, week, and day. Week 2, at our closing range of the week after non-farm payrolls, we have the pump up later into the session. Then we have our opening range. Same process applies. An excellent question from a trader today was, why do you talk about that with during the day? I saw you marked off levels, opening range, initial balance. The same process applies. Opening range, London continues to go higher. After 2 sessions, as does any 2 sessions, if you go read Dalton Market Profile, the first 2 windows will, in majority of cases, one of those extremes will tend to hold. We have a 3-session setup. The pump beginning in the Asian window, our opening range, our initial balance, pump, 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 New York Open, 15 minutes to the high, an engulfment, pin hammer will blow this up a tiny bit so traders can see that clear. 15 minutes to the high, everything is timed and measured, and the reversal begins. 0 stress, 1 bar stop, and another great question from a trader who said to me today, once you see this, you can't unsee it, is this. What gives you the confidence to hold on to something is when you understand the setup that you are trading. Risk comes from not knowing what you are doing, Warren Buffett. And so when you trade these long enough and you have a process to manage and step back and be willing to wait because you understand the timing. Opening range, pump, 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 higher highs, initial balance, take out the high of the year, the high of the month, the high of the week. Pump, pump, pump into the US Open, lower low on the inside. That is the setup for the pump and dump. Reversal at the high of the year, high of the month, high of the week, and high of the day in the new week on week 2 for 0 stress, 0 heat, reversal opportunity on the Canadian dollar. Next up, we're looking at gold and Friday non-farm payrolls took out the low of the year, month, week, and day before going vertical and then reversing into the close, basically closing where it opened, a doji day. And heading into our new day, we had a collapse in the Asian window for a nice short trade opportunity from closing price. We're not going to go into closing price or levels in this video. I'm going to save that for later. I've got some great information to share with you specifically on those levels and some setups and trade setups specifically regarding those. But I'm going to save that for later in lieu of just keeping that between us so that doesn't get go viral and be sold off as a new playbook. But today we're talking about low of the year, month, week, day opportunity on gold. The market put in our opening range. Again, same process applies. Right at the Europe Open, they just pinned the low slightly, made a lower low before collapsing down and going vertical. And as I marked off for traders, if you take the low of the week, low of the year, month, week, and day, that was a 75 pip stop hunt, 3 levels of drop, pinning down into the low of that last hour in the Europe-London window before reversing in that first hour. And as I marked off on the community page, that was 1 hour, and then first hour put in a lower high. That gave us 2 hours, and then the middle hour, New York Open window, third hour, 1, 2, 3 to the low. We'll just bring that up here. Third hour opens, and this is a 15-minute chart. We'll go to the 5-minute chart in a minute, giving us a short squeeze reversal trade opportunity at the New York Open, something that we talk about in page 90 of the playbook. I mentioned that when a market breaks out like this, right at the timing window, we're in the last hour of London. We're going to look at an example of a market that breaks out on a range expansion in a moment, but understanding that this market is about to head into the U.S. window as it breaks out of the low of the day. And our first hour puts in a lower high. Now, this is almost an obvious opportunity for a short squeeze setup. We're on day one, and the market is a creeping trend into the low. 1 hour, 2 hours, 3 hours, New York Open. We're at the low of the year, month, week, and day for the parabolic short squeeze reversal. Now, one of the things that traders need to understand is once this market starts going, regardless of these little bars that people are looking to trade, this thing's going to go to its target. That's the whole point. They got traders trapped down low in the London session, and they've got a short squeeze opportunity that is going to go vertical. Now, this is different than a market that goes into a breakout for a continuation. This market has broken out just prior to the U.S. window. Opening range, initial balance, a coil into our low of the day. A coil into our low of the day for the short squeeze. 1 hour, 2 hours, 3 hours, New York Open, parabolic reversal. Zero stress, 1 bar stop. This is a 5-minute chart for the reversal trade. Now, one of the things that's important is once this starts going, whether you're in it or not in it, is to understand not to counter trend it. Now, this is the other thing that I'm really going to emphasize to traders is I'm looking for high quality setups driven by other time frame traders that I can put size into. So the last thing I want to do is counter trend a reversal with size. That's me trying to trade movement and hope I get lucky versus scaling in. Another great question today was, do you go full size right when that's happening? Now, typically I will be adding a starter as this starts to break and adding positions in up into a certain point in time in terms of timing. So minimum in this window, as I'm adding in and price is confirming, I'm sometimes happy just to take that trade on a reversal and ride it out. We'll add, first lot, second lot, third lot in terms of the block sizes, and then just be taking some money out as it clears a high so that I get paid on the trade and holding the other ones for the range expansion. Now, as I drew for traders today, this lower high forms a rectangle down low, which can be used as our measuring tool. That's a pattern within a pattern, as Peter Brandt would say, for a full 100% range expansion opportunity on the reversal trade on gold. Low of the year, low of the month, the low of the week, the low of the day, 1 session, 2 session, opening range, initial balance, short squeeze, reversal trade on gold. Now, next we're looking at West Texas, and I've left the high-low levels on this chart with the specific intent on understanding this opportunity. So again, I'm getting messages regarding what day count it is and everything else on all these instruments. And I'm going to repeat this for simplicity's sake, as always, as I have in all the videos in the playlist. Everything you need is in that playlist. Monday is day 1. If you identify a day 3 on a Monday, or you identify a template for a parabolic setup, that's fantastic. But I want to just hammer the fact home that when Monday starts, it's a new timing cycle. Monday's day 1, Wednesday's day 3. Wednesday resets and becomes day 1 into the closing range of the week. Wednesday's day 1, Friday's day 3. That means Tuesday and Thursday are day 2. Now, I had a comment today from a trader saying, well, that's really complicated, this strategy, the day count, people, it's so complicated, maybe the strategy's flawed. The generalizing for all traders, Wednesday is day 3, Friday is day 3, hence the terms free cash Wednesday, free cash Friday. Now, there are other parabolic opportunities for 3-day setups, 3-session setups. So again, 3-day setups on page 31, 3-session setups, page 37, but understanding the opening range and initial balance. We have 3 days of longs and short opportunities in the markets. We have first red day opportunities, as we saw in the Japanese yen, first green day opportunities, and the powerful inside day, narrow range day, false breaks, trend trades, and low hanging fruit opportunities. Now, what's powerful about oil, spot crude, or West Texas is remember again that when January starts, okay, we got people saying, well, yeah, but it wasn't the high of the year and this and that because the high of the year was over here and blah, blah, blah. Yes, it is. January 1st, first trading day of the year. January 2nd, that is the high of the year. They went down and they put in a low of the year. Then they made a higher high on Thursday. That's the high of the year. Then they went higher later in the U.S. session on Friday, parabolic move in the U.S. window. We went over that in the last video, parabolic move at the U.S. Open. And that formed a day 1, day 2, day 3 template from the failed breakout at the low of the week. So remember, we've talked about this. Peak formation low. That is not confirmed as a day 1 until they break out of the high on Thursday. That breakout on Thursday confirms Wednesday as the low of the week and day 1. Day 1, day 2, that's a day 0 setup. Peak formation low, peak formation high, consolidation, parabolic template on the day. A well-engineered parabolic template on the day for the U.S. session blow-off move that did not break out and go higher. Still gave 75 pips. It was $1 from low. Perfect entry gave traders $1 on the trade. But that trade broke down today in the Asian window. Opening range, same process applies. Opening range, and our initial balance continued to auction lower. We'll zoom in here. Now remember, that's the high of the year, the month, the week, and the day. We've broken down in our London window and made a lower low, and our initial balance continues to auction lower heading into our U.S. window. That is our initial balance. We are now in breakout. When a market goes into a breakout, what do? I look for a range expansion opportunity. This is not a breakout that's consolidating into the window for a reversal. We are now in a breakout. We are in a breakout move. The market breaks down again at the open of our U.S. window. We are in a breakout. So the target, therefore, if I have an opportunity to enter into this trade, is a range expansion opportunity. Second hour gives us that trade for an easy, zero stress blow-off move, completing a 100% expansion of the range. Beginning of the second hour. Now we're on a 5-minute chart here, and obviously not even needing to use the universal EMA, but I want to just point out when we have a market that's in breakout and we're level 1, level 2, we're looking for a level 3 blow off. This is the creeping trend model. creeping trend, consolidation outside of the range. We see this on a day 3 reversal sometimes as well. That coil outside of the range is targeting a full range expansion. That is a parabolic template. We don't even need the EMAs on there. This is aligning all time frames. Remember, the market has reversed after a 3-day pump through the high of the year, month, week, and day. We've had 2 attempts to break through. It hasn't gone. They've broken down and broken out prior to our US window. When it breaks out, I am targeting a range expansion. That is the opportunity. A range expansion trade on a breakout. This is not a market that's pushing up and failing. This is a market that has gone into breakout, hitting our full 100% range expansion for easy, free cash. Next, we have the DJ30. It also traded down to the low of the year, month, week, and day. 15-minute chart again. And right at our New York open window, we have a market that has pinned down into the low of the year, low month, week, and day. We already made our lower low. We had our initial balance, opening range and initial balance that broke lower in our London window, putting in a lower low before making higher highs prior to our US window. They came back up inside of our lower peak formation high made at our Europe open. But the market then went vertically down into the low of the year, month, week, and day before giving us our pin hammer and another little pin hammer at the beginning of the 3rd hour. When we go to our 5-minute chart, we have our engulfment and pin hammer coinciding with the beginning of our 3rd hour. New timing cycle, right? 1 hour, 2 hours, 3rd hour reversal, and then the reversal back to the high of the day. Low of the year to high of the day. Now, the other thing I want to kind of emphasize here is that you can make trading as complicated and as simple as you want. When you step back and just sit on your hands, as Jim Rogers says, you'll be amazed at how you're not chasing the little bars. Pay attention to the clock, learn to count to 3, and understand the type of opportunity that is setting up on the day. High of the day that dumps down. What type of template do we have here? Are they pumping it up for a dump, or are they dumping it down, opening range, initial balance, 3rd window, dumping it down, working the low, engulfment, 1 hour, 2 hours, 3rd hour reversal, explosive parabolic opportunity. DJ30, low of the year, low of the month, low of the week, low of the day. Parabolic reversal, taking out the high of the day. Now we'll look at the Euro Oz, another example that traded up to the high of the year, month, week, and day today. And I know there were several other parabolic opportunities. Obviously, NASDAQ, S&P. We had several opportunities in earlier sessions. Obviously, Asia, London. But I'm looking at a 3-session reversal trade today. And I want to emphasize again, you can make trading as simple or as easy as you want. And I know there's gurus out there peddling BS. But I'm going to encourage you to think about this. What are you able to reproduce in a very simple, reproducible manner that's scalable in size? I'm not talking about catching a move. I'm not talking about getting some pips. Where can you put size into the market and know when to scale in and understand why and what type of opportunity is it, and be able to hold on to that with conviction, confidence, and an understanding of how that trade should behave. So we're looking at the Euro Oz first red day on Friday after non-farm payrolls that broke down and made a lower low. And again, I don't have the daily levels on here. It's not even necessary because we're talking about high of the year, low of the year reversals today. But let's go back to our simple process. Opening range and initial balance. So we have our opening range made in Asia. The market trades higher in the London session, expanding the range, higher highs, higher lows, continuing higher prior to our U.S. session window opening. There's our initial balance. Asia, London. US window opens up. No major red news on the calendar, by the way, on today's session. Pumps up into our high of the year, month, week, and day. Second hour opens, triggers the high of that first hour before reversing and engulfing. This is our 15-minute chart. So we have 1 hour up. We have one session, two session, 1 hour up. Second hour engulfment reversal at the high of the year, month, week, and day. On our 5-minute chart, we have our micro M, extended M structure. We have our little higher high, higher lows, then the pump up, and then our little micro M structure, engulfment pin hammer, high of the year for the engulfment second hour, zero stress, 1 bar stop, beginning of the second hour. Timings, levels, behavior of price. For the short trade, back into the close of the day. Now, if we come back and just look at the open of the day, we have a market that went down and made a peak formation low first in Asia before reversing and making a higher low that left a small gap. Now, timings is where this trade, if traders were holding on to this and hoping that it would collapse back down through the low of the day, as time goes on in the session and we are approaching the close of the day, I'd be quite happy to lock this in and take the money. Now, the other scenario to look at for a profit target on this trade is to put 100% range expansion tool on the high-low bodies. And we have 50%, but we also have 3 levels of drop now, 25%, 50%, and 75%, which takes us into the close. Again, timing's the length, the longer this trade progresses as it's trading lower, either locking in the money or having a projected profit target level, 3 levels of drop from the high of the day. This is just a 100% high-low, 50% and 25% increments on either side, 75 and 25. So coming back to just understanding some very simple things. Whenever we have a new month, new week, new year, timing cycle starting, those levels are relevant. A new week is very specific. A new weekly level broken, higher highs, higher lows. But keeping things simple, 3 sessions, opening range, initial balance, being willing to sit on your hands and just understand what a setup looks like. Instead of trying to get into a move and trade sessions, if you're trading Asia or London, obviously there were opportunities for the range expansion trades. But then we have the reversal opportunity that coincided with the highs and lows of the year, month, week, and day. Week 2, new year in January for fantastic free cash Monday opportunities, 1 bar stops. And these trades, as you see, they're zero heat. Zero heat. Now, here's one thing in closing that I will mention. I have trained myself through a lot of losing trades of what not to do. So it's easy for me to step back now and say, that's not a parabolic setup. That's not a parabolic setup. That's not a reversal opportunity. And when traders get frustrated or impatience is the number one enemy to getting into poor quality trades. And your best friend is the clock. Understand the importance of timings. I put it up every day. New York Open, New York Open, New York Open. There's going to be trades that go in the first hour some days. There's going to be news catalyst opportunities. There's going to be parabolic opportunities that start in the first hour because it's going to go 1 hour, 2 hour, 3 hours for a range expansion. But keeping things as simple as possible means waiting until a parabolic opportunity presents. We've just started Monday. Monday is day 1. Tuesday's day 2. Wednesday's day 3. We're going to get parabolic opportunities this week. We've already had some fantastic moves on Monday. That's our opening range now into a new week. If weekly levels are broken, we have other time frame traders involved in those markets now. The psychology of understanding the trade setup is where the power is. Know what a parabolic setup looks like and how it's going to behave. And do not counter trend that parabolic move when it starts. Keep it simple, traders. Master your craft 1% better every single day. The opportunities are not going to go away. There's going to be two things: whether or not you are able to be patient and filter through a basket of instruments and execute only those parabolic opportunities, or whether you will trade, take good trades, take bad trades, take all kinds of trades, and go 50-50 back and forth and struggle, or be willing to sit on your hands until a market coils for an explosive trend trade or reversal trade, a 3-session setup. Have a great day, traders. Great start to the week. Keep it simple. Keep getting better. 1% better every day. This is going to be your best year yet. And may the markets go with you.